Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good to have you back on.
Happy to be here.
Well, tensions are rising again between the U.S. and China. Many issues, of course, but each of them criticizing the treatment of minorities in the other's country. The Biden administration's decided to leave in place the tariffs put on China by President Trump. What explains that decision, and what do you make of it?
Okay, well, no one really expected the Biden administration to cut tariffs on Chinese goods in the near future. And that's because the political position that Biden and his Democratic Party is in right now. Even though during the presidential election, Biden won the popular vote by 7 million votes. In terms of number of states and electoral college votes, the election was much closer. And if you look at the Congress, especially the Senate, then there's virtually no lead. So President Biden really has to keep his current coalition together. Now, if Biden removes China tariffs or even engage in free trade activities like signing additional FTAs, Biden may lose progressive Democrats, moderate Republicans, China hawks, and labor unions, especially in the U.S. Midwest manufacturing belt. So Biden cannot really afford to lose any member of his coalition, and if he engages in free trade, he's going to lose at least some of those coalition members. So trade policy is really taking a back seat. Since the beginning of the Biden administration, Biden administration has only really carried out two relatively major trade policy decisions. The first is withdrawing support for Yoon Myung-hee for WTO Secretary General, so Ngozi Okonjo-Iweala can become Secretary General of the WTO, and then mutually withdrawing tariffs imposed between U.S. and EU, the tariffs which were imposed because of subsidies for civilian aircraft production. Other than those two decisions, President Biden is really keeping quiet on trade policy, and this decision on retaining Chinese tariffs is part of that. Also, President Biden is using China as leverage for his domestic economics and human rights policies. When President Biden had a press conference last week where he said that China is not going to become the leading country in the world, the latter part of that sentence included the phrase that it's because the United States is going to continue to grow and expand. So President Biden wants to use China as a leverage to get his infrastructure investment plan, education plan, R&D plan passed through Congress and get accepted by the American people. So China is much more useful as leverage for domestic policy right now, as well as strengthening the human rights policy of the United States, which President Trump ignored, and strengthening the coalition between U.S. and European and Asian countries, which were also damaged by the Trump administration. So for now, at least, President Biden is using China as a tool. I think, at least from his point of view, it's much more China is much more useful as a tool to get his domestic policies across.
Well, China issues have been weighing somewhat on the markets lately, but on Friday, Wall Street, all three main indices saw a big gain. The S&P up more than 1.5%, the Nasdaq 1.25%. What's the story in the global markets right now, and what do you see in the days ahead?
Okay, well, the S&P actually hit a record high on Friday, and the reason is that the U.S. has a lot of optimistic factors right now. The vaccination is going faster than what anybody expected just a few months ago, and then the Financial Reserve announced that banks could resume buybacks and raise dividends starting at the end of June. So that's another indication that the U.S. economy is going back to normal, and Fed is going to let the financial institutions to try to make more money again. Also, the inflation fears have fallen somewhat because the personal consumption expenditure inflation, the Fed's preferred price index, rose less than expected. So the inflation fears have calmed down a little bit. 10-year Treasury bond yields fell from a high of 1.74% to 1.63% on Thursday, even though it rose slightly back to 1.67% on Friday. Consumer sentiment index is also up higher than expected. So those optimistic factors did hit the U.S. stock markets, but I think there's going to be some profit taking early this week because over the weekend the U.S. Stock futures were down, and also the stock investors are waiting for jobs report on Friday and details on Biden's infrastructure plan. So I think for this week at least, we're going to see a bit of a fall in the beginning, and then wait and see attitude. Europe and Asian stocks are more or less taking cue from the United States. Both stocks in both areas rose at the end of last week, but the Asian stocks are mostly down today.
And you mentioned that Wall Street futures are lower right now, looking at a lower opening on Monday. Korean stocks closed a little lower today. Tell us about the local market.
Okay, well, Kospi is down today for the first time in 3 trading days. It tried to rally in the mid-afternoon, but failed. So it really fell during the end of the trading day, last few hours of the trading day. Institutions sold 712 trillion won's worth of stock. And basically, the lackluster market right now seems to reflect overall uncertainty on where the market is going to go because people are now very nervous that perhaps the markets are too high. Kospi was down 0.16% today, ending at 3,036.04. Kosdaq, similar story. It rallied for most of the day, but it lost force at the end of the day, so it lost for the day overall. It fell 0.27%. It ended today at 954.10.
All right, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us.
Thank you.